Here's a full breakdown of the USD JPY position that I made $3,000 on this week. And here's some screenshots of the profit and the running trade. Let's get into it. So starting straight out, we are looking at the 30-minute time frame here on USD JPY. And this is just to build a premise for the picture behind the trade that I took. Okay. This trade was a purely intraday trade executed from the 5-minute and 1-minute time frames. So it really didn't use too much input from these higher time frames. But the overall idea that I had for targeting where I was targeting did actually generate from a larger picture idea. So from the 30-minute then, what we can see is that USD JPY is continually making lower lows and lower highs. And this is forming a pretty clear downtrend. Now what we've also seen here is the market come up and form this little group of relatively equal highs, okay? We have 2 equal highs here, and then we also have got 1, 2 here, and they have just about been swept out here, but what we've got above that is a large open imbalance. So I'm expecting at this point that even though we're in a downtrend, the likelihood of the market pushing up towards this supply is quite high. So I would be looking overall for the market to trade towards this level, and then we could begin to look for possible selling ideas, or of course from previous supplies a little bit higher up. But basically I'm using this higher time frame imbalance to consider where price could pull into before selling off. Okay, and then what I want to do from there is find the most suitable point to actually buy the market from. So now if we scale down here and let's go to the 15-minute time frame to continue, we can see that we have once again a floor of liquidity. Okay, so liquidity is visible in the market as equal lows or equal highs, and also sometimes of trend lines. And basically what it shows us is there are buyers here with stops below. Okay, so this is kind of a support floor. And very often these support floors will be taken out by price, and then price will return to the original direction. Beneath the liquidity, I also saw this demand zone. Okay, so I'm using the last candle before the impulse, which is my general rule, and that would be marked up just like this. Okay. Now, as you can see, this hasn't actually been retested yet. We have the 1, 2, 3 relative equal lows, and we have a small piece of imbalance leading us towards this demand. So if you watched my previous video on inducement, you will understand what this is. If not, I'll put a card for it just up here. But this to me looks like an area in the market where inducement is forming. So what this means is that this area here, being the kind of demand zone that most people will be looking at, could be seen as an area to buy from. However, due to the liquidity and the open demand just below, the likely scenario is that instead of reacting from this demand, we get buyers coming in at these levels, and then the market trades into this demand, and then rallies to the upside. So this gave me an idea that potentially if the market started to give some bearish structure on these lower time frames, we could start to look for a sell. And our sell trade could target the 130.500 level, which would be a key level just here. And as you can see, that sits just below the inducement demand zone, giving us a very clear target to push into. So now what we need is the reason to sell the market. If we don't have that, we don't have any trades. But we've got the overall idea for a movement set up, okay? So this is where I went down to the lower time frames. Just before we continue with the video, I have a free training that you can sign up to. 70 minutes long. It's going to teach you 10 different topics to help you turn your trading around. So make sure you check that out. The link is in the description. It's totally free. Let's get back to the video. So first of all, here on the 15, we can see that we had this big sell-off, which broke structure just here, also broke structure just there, which is a valid structure break because this was a higher high breaking into lower lows. And then we saw price come up and trade into this supply zone just here. So this initially wouldn't have been a selling move for me, okay? Because obviously I would say, well, there's imbalance above. The likely scenario is that we push to the upside, and then we could look for selling from kind of that area. However, after reacting from that zone, as you can see, we did have a downside reaction, which gave us a break of structure. So looking here on the 5-minute, we can refine the supply to there. We can see that that was still clearly retested. Now we can mark on this structure and we can see that just here, there was a break of structure. So now we have a market which has formed this inducement zone, pushed to the upside, made a higher high, higher low, higher high, then broken down into a lower low, giving way to this demand zone, making it clear that we are shifting into a downtrend. And from this point, we've now pulled back, and once again, we have traded into a supply here. So the overall idea I have for a trade at this point is to sell the market from this point and trade it down towards that 130.500 level that we were looking for. Now, at this point, we're going to go down to the 1 minute time frame because this is where I actually executed my position, and it's how I managed to get such a nice stop loss on the trade. So ideally, if I'd have been active at the chart exactly when this triggered, I would have been looking to sell the market from this point here, and then I would have been looking to put my stop over the high here and bring that down towards the target. Now that would have been an absolutely amazing trade of, let's take a look, 16R. However, I was not actually active at this point. I came into the market just after we had formed this high. So my entry was taken very slightly lower down, still nothing to be upset about by any means. And let's get into how I chose that entry and where my stop loss was and why. So after reacting from this supply, the market started to move to the downside. And this move to the downside was totally efficient. Okay, what I mean by that is we left no imbalance along the way. This is the first supply. And as we can see, we had a sell-off, pullback, retest, leading us into the second supply, where we can see we had a sell-off, pullback, retest. That leads us into the third supply, where we can see here that we had this sell-off, pullback, retest. And it was around this point that I decided it was good to execute a move. This full range was efficient, so what does that mean? Well, it means that we don't actually have to go this high up with our stop. We can dial that in. And for this position, realistically, I could have actually dialed my stop to around this point, maybe even this point. But I opted to go a little bit safer, so I put my stop at 131.074. And that sits us just above this area here. And the reason that that's a safe place for a stop if we're selling this market is because due to the fact this range is efficient, there is actually no reason for us to hold the trade past this point. If the market gets this high, the likelihood of it actually reversing from here is very, very low. Almost as low as if we'd just taken this high out. So basically what we could do here is look to maximize the profits because we know if the market does go this high, we were wrong. There's no reason for us to half our risk reward and get stopped out up here. We may as well just cut the trade there and accept that we were wrong on this position. By counting that efficiency, by looking at the supply, retest, supply, we can really get dialed in stops, which allows us to maximize the profit on the trades that we do take without putting stops in invalidated positions. So my trade was executed just after this. I executed at 131.02. My stop loss was 7.4 pips away. My target was into 130.50. I entered the trade at 131.02. My stop loss was at 131.074, so 5.4 pips away, and the target for this trade was down into 130.5, which gives us a total risk reward of 9.63. We have a 5 pip stop and we are looking for a 52 pip target. So we're very, very close to a 10R profitable position. Now at this point, I executed the trade market execution style. I sent this out to my team and we got into this position ready to ride it to the downside. Now let's take a look how that played out. So this was a pure intraday trade using the low time frames like the 15 minute, the 5 minute and the 1 minute, but it was all built around that larger picture of seeing price pull towards this inducement area. So as you can see, even when I'm trading the lower time frames, I'm always considering what's happening on the bigger picture basis so that I make sure I'm trading with the larger trend and not taking any crazy moves against the flow. I always advise to keep in tune with those higher time frames because if you do, the intraday trades become very easy to find. If you've got a clear area that price is likely to pull into based on a higher time frame picture, then all you have to do is find a safe execution on the low time frames and it's a very clear trade where you trade it towards that area. Now, one unfortunate thing is after I closed this trade, I actually did over 10R in positions that day because I closed up 8R on Euro USD as well. So I had some really, really good profits for that day and that actually led me to kind of chill out, okay, which is totally fine, but it did lead me to actually miss out on this large position going with the flow of the market. So had I just executed on the long side, I could have also locked in a very big win this way around as well. So there's always something we can learn and we're never going to do everything perfectly. And I just wanted to add that in there to let you know, okay? Not everyone nails every single trade, but you don't have to. If I've just done 9.60 on the short side, although I've missed a profitable opportunity on the buy side, it hurts a lot less. And that's that. That is the USD JPY position that I took this week for $3,000 in profit. If you want to join me on all the trades that I take and learn the systems I use to actually find these positions, then head over to the link in the description. There is a 50% sale currently running on my trading program as I roll out some new updates. That's not going to last forever, but if you're here fast, you can definitely take advantage of that. Hope you've enjoyed this video. Thank you for watching, and I will see you in the next one.